All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. So what do you think the state of the US will be like in the year 2030? Well, it seems like 2020 or 2030 is a year that a lot of people have been referring to lately. You know, whether it's from the left side of the political aisle talking about getting a control over climate change by that year, or the UN wanting to achieve its sustainable development goals by then. Some have even posited that if China leads the race in AI development by 2030, then they will likely rule the world by 2100. And hey, I wouldn't put it past them by this point. But 2030 just seems like it's in the forefront of everyone's minds right now. And here's something that's a little bit more tangible that you could probably sink your teeth into, and something that we'll probably have to reckon with by the year 2030. And that is that the wealthy will actually transfer $15.4 trillion by 2030. Now you may be asking, well, how is that? Well, this is the crux of this video. By the year 2031, that will be the final year when baby boomers are actually scheduled to retire, according to the current US definition of retirement. So why is that important to a gold and silver channel? Well, think about what the largest generation, no longer working, lessening consumer spending would mean for inflation. Well, on top of all the crap that we've been throwing onto the economy, a significant component of US GDP will actually be hampered by that generation spending less within the economy. And the more that we print money and the slower our GDP growth, the higher our domestic inflation. You can see the math behind this here, provided by the Federal Reserve with their article here called The Quantity Theory of Money. We've talked about this before, this particular equation, but here it is, P equals VM over Y. And think of P equaling aggregate prices, but also think of it as inflation we're trying to solve for. On the other side of the equal sign, you have M, which is the money constantly being printed. V is the velocity, so how many times the money gets turned over within an economy. Y is our GDP. Now, if over time Y remains stagnant or barely grows compared with the rate at which money is being printed, then P will increase. Even if the velocity remains low, the growth rate of the money supply has shown that domestic inflation has still been on the rise. So we actually did a video on this channel maybe a month or so ago about this fact. So what does this all mean for gold and silver? Well, this will be the final working decade for most baby boomers. GDP is already expected to slow because of our Roni's response by the end of the decade, another 2030 marker that people have already spotted. And this will just add on top of that. Now, that's not to say that there won't be people who will continue to work past retirement age. I assume most people, or not most, but I assume quite a few people will do that. But I also would expect that most people out of that generation will be in the retirement camp. Now, this is essentially why I say gold and silver are long-term savings plans. You know, I basically just laid out a 10-year stacking plan. And by the year 2030 to 2031, GDP will be hit hard by a lack of consumer spending. And hey, the way that my generation reproduces, that consumer spending will likely remain low even after the year 2031. My generation, we don't really reproduce kids. We adopt dogs and we get plants and call ourselves plant dads, So that's just another story for another day. But expect inflation to continue to be a problem for the foreseeable future within the US. So keep your strategy going when it comes to gold and silver. We have a lot more way to run with this. But thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com. Happy Sunday.